Hi, this is Antoine Harris with Platinum Bridge Wealth Strategies, and the markets were down over 4% last week, which was unsettling for a lot of people, so I wanted to give you my perspective. Now, the month ending January marked the 10th straight month of gains, which is the longest streak that we've seen since 1959. So these markets have been on a tear. It's been an excellent market. So I'm not overly concerned about what happened last week, honestly. It's something that I monitor, but this is actually healthy for the markets. This is normal. It's good to kind of tap the brakes a little bit and let some of these gains digest. You'll see all the headlines and everything, but the thing that I like to point out, when I look around the world, and I look at the economies around the world, not only in the United States, but in Europe, Japan, growth is back online. We're seeing some of the strongest growth that we've seen in years. And you couple that with the fact that our unemployment rate is now around 4%. That's the lowest we've seen since before the housing crisis of 2008. And we have this tax stimulus program. We have relatively low inflation and relatively tame interest rates. So that's all a backdrop for a pretty robust market in 2018. Now, some things that I am concerned about that are starting to come online, we're starting to see wage inflation kick in. So because of the fact that unemployment is so low, employees are starting to command higher wages. They go to their boss, they ask for a raise. When they're being recruited, the employers have to pay more because there are fewer workers that are qualified for these jobs. So that starts to put upward pressure on these wages, and it starts to manifest as systemic inflation, which of course is problematic. Now, to combat that, the Fed may start to raise interest rates, which was the reason why the markets went down last week, because the markets are now concerned that the Fed may have to hike rates more than anticipated or quicker than anticipated in order to mitigate inflation. So in anticipation of this, what I typically do is I use floating rate bonds, because the floating rate bonds do not lock you into a set interest rate. They reset every 90 days or so. So if the Fed does start to increase rates at a more rapid pace, these bonds track it in lockstep because they're resetting every 90 days. Now, the downside to these floating rate bonds is that they have less credit worthiness. They're more risky from a credit perspective. So that's typically problematic during a recession, but as I mentioned before, I'm seeing very strong growth around the globe, so I'm not so concerned about recessionary pressures right now. I think it's a good time for those, so you may start to see some of those in the portfolio. Also, on a relative basis, the United States has done very well since 2009, and our valuations have starting to get ahead of themselves a little bit. Now, Europe and Japan, their stimulus programs started a few years after ours. So the same catalyst that we put in place to help boost these markets and jumpstart our economies, they did the same thing overseas. They just started a few years later. So that's starting to take hold now, which is why the economies around the globe are doing so well. But because they started later, the valuations in their stock markets are lower. So I'm seeing some opportunities to take advantage of some of the stimulus that they're seeing from the governments. Hopefully that manifests in the markets there the same way that it did here, but I'm able to take advantage of that at a lower price point. I can buy those stocks cheaper than I can here domestically. So you'll start to see me overweight some of the positions internationally. Finally, because of some of the things that we're seeing economically, there's downward pressure on our currency. So if I'm able to earn money in a different currency when it's converted back to dollars, if our currency is lower, then there's a favorable exchange rate. So you're going to start to see me put some positions on that give us exposure to foreign currencies so that we're able to benefit from that when they convert that money back over to US dollars. If you have any questions at all, please give me a call. This is Antoine Harris with Platinum Bridge Wealth Strategies. You have a great day, and I'll talk to you soon. Go Eagles!